All right, welcome everyone to our Cattle Market Outlook webinar. Very appropriate intro song, Bob Dylan, Times They Are A-Changin'. Really excited to have Rick Wright here tonight. I know for our own farm, we don't do a great job marketing cattle, and these profitability opportunities in the livestock industry do not come around all that often. So it's good that we're interested, everyone that's on tonight. So yeah, like I said, tonight it's a little bit different. It's just going to be a discussion. Me, dumb cattle farmer that doesn't know a whole hell of a lot about marketing, and Rick Wright. So Rick has his own consulting business from Rick Wright Cattle Consulting. He also writes an article in Cattle Country, which for those of you in Saskatchewan, Alberta, is kind of the Manitoba beef producers magazine. So Rick, if you want to turn your camera on, I got your presentation up next. Thanks a million for being here. And like I was telling you before, just give me a heads up when you want me to change slides and I'll ask all the dumb questions. You can give the good answers.
Okay, well, thank you, Joe. And it's my privilege to be here tonight for Covers & Company to talk about the livestock market. I've been a livestock order buyer for 43 years, and we buy a lot of our cattle in Manitoba, southeastern Saskatchewan. Right now, my biggest client in the consulting side is JGL Livestock out of Moose Jaw, and most of you are probably familiar with them, but they're Canada's largest livestock broker. JGL moves about 725,000 cattle a year, and they supply cattle to feedlots all across Canada, the northern United States, and it's a real privilege. I've been working for them for about 2 years here now, and it's certainly been a positive impact on the Manitoba market. So I get often asked, where is the marketplace going? What's the market going to do? You're sitting there every day, Rick, and give me your idea of where you think it's going to end up here in 6 months, 12 months, and 2 years from now. So as I mentioned, I think we're on the verge of a price explosion in the beef cattle business here in Canada, and especially in Manitoba. We've saw already a pretty good increase in the prices in the month of January compared to what we saw in the fall, and February has carried through with a little bit of a bigger price increase. And of course, now we're into March, and the grass cattle market's right on fire. It looks like those 8-weight cattle plus have kind of found their level. Where the grass cattle are going to end up being, I have no idea. They're higher now than I ever thought they would be, and I still think there's a little room for them to go up. So Joe, if you want, just touch the next one. I think that one of the things that we're going to see is the demand is going to outlast the supply here. We have more demand for cattle than what we're going to have cattle to sell. And with that, that always sparks a very aggressive buying attitude from the buyers. And certainly when we look at the numbers going forward, we certainly see that there's opportunity here in the cow-calf sector especially. I think that the cow-calf operators right across Western Canada have the most potential benefit from this major price increase. It's going to be in the calves, and we haven't seen the highs yet. When we get to this fall and possibly even next fall, we're going to see prices we've never seen before. We have the potential, and we probably got to it already in March, to see the prices higher than they were in 2015. Now, if you remember back that far, at the end of 2014, the Americans saw a real jump in their cattle market, and we saw a significant increase in 2015. It was a fantastic year to be in the cattle business if you had groceries on the shelf to sell. It didn't last very long, but we have potential to exceed that now. These prices have the potential to last until 2025. And there's experts in the business that say we're not going to see a rebuild in the cattle business until 2027, especially on the American side. We may never get the herds rebuilt to where they were 5 and 6 and 7 years ago in Canada. There may not be the desire from the young people to get into the business, and a lot of the cattle guys, if you look at the demographics, they're the same age as I am, in your 55 plus into the late 60s. Those guys are retiring out, and a lot of those places are not being restocked with cattle or cattlemen. Joe, you can go to the next one. So why is the market going up? Well, the cattle supply inventories dropped all across North America. the U.S. cow herd today is the smallest it's been in the last 50 years. And you may ask, well, why is the American cow herd so important to us? Well, they're 10 times bigger than us, and they're our biggest trading partner, both on the live cattle and on the beef product side. So whatever happens down there is going to happen up here. It may be 6 months later, it may be tomorrow, but we follow those trends all the time. And where we can't export into some markets, they are able to export into those markets. And of course, then they buy product from us to fill their domestic demand because they're exporting out. And our export market has got really good here in the last couple of years. Canada Beef, Canadian Cattlemen's Association or Cattle Association now have done a great job of promoting our beef overseas. And we'll talk a little bit about that when we get into some pricing. You know, drought conditions.
I'm just wondering, the U.S. cow herd, the smallest in 50 years, how much has that dropped? Sorry about that. How much has that dropped in the last, say, 2 to 3 years alone?
That's been significant. It's been significant. I can't give you the figures here right off the bat. We'll touch a little bit on it as we move through, but certainly we saw a major sell-off there, and it's been drought related more so than the demographics of the people in the business. It's been strictly drought in the Midwest, Texas, in the Panhandle, and those areas. You know, they haven't had rain for almost 2.5 years of any significant amount. So the culling of the cows has been heavy. You know, drought conditions will contribute to further culling in the U.S. in 2003. And one of the things that the drought has done is it's placed the feeder cattle in the feedlots sooner than normal and at a lighter weight than normal. So those cattle were taking up pen space in the fall earlier than what they should have been, and they're going to get into the meat market that much faster. So once we get that little bit of a bump out of the road, we're going to see an even bigger shortage moving down the road. And that's why I'm so optimistic, you know, moving forward that we are going to see a supply-driven market. Next slide, please. You know, we take a look at the U.S. beef market, and for 4 years, they've been in continuous liquidation. They're down to 28.9 million cows. That's 4% in the last year, and that is huge. And there's been very little heifer retention in the U.S. We've had record cow slaughter in the U.S., and that continues into the first quarter of 2023. You know, high prices for hay and feed has impacted the decision-making on expansion, where a lot of producers may, if they had the feed, look at getting back into the cattle and getting those numbers back up to where, you know, the ranches are sustainable. They can't do that because it's costing too much money and there's no surplus feed on the horizon. You know, the experts in the South claim that we could see a U.S. decline in the cattle numbers. These are bred cow numbers by 500,000 more in the next 2 years. Next slide, please. So it gives you an idea. We talked about the cattle going on feed quicker and lighter. Take a look at the cattle on feed in 2022. That's the red line compared to the blue line. As you see, about 1st of November, all of a sudden the numbers dropped right off, but we had significant increases of cattle placed on feed in August and September. So that just supports what we were talking about earlier on, and it kind of gives you a better visual when you got a graphic to take a look at. Next slide, please.
Rick, just to touch on, geez, the computer predicted that one. That wasn't even me. Just to touch on this, this slide a bit, Rick. Like, is the fragility in the market enough where it's like these areas start getting rain, this could turn around, or it's one of those things where it's going to take some serious time to rebuild the cattle herd?
Oh, it's going to take some serious time because you don't make cows overnight. Like, you know, the heifer calves are going into the feedlots. They're not being put out to breed. So you got to wait for another calf crop to come before they retain some of those heifers. Then when it happens, then they start retaining heifers, and we'll touch on that a little bit down the road here. That just shorts the feeder cattle market that much more. So it keeps that, you know, short supply in front of the buyers all the time. So, you know, even if we don't start to rebuild on 225 to 227, we're still going to see a strong feeder market because we're taking all those heifers that are out of, you know, production now and putting some of them back in and shorting the supply that's available to go to the feedlots. So in Canada, closer to home here, the cow numbers in Canada have also shrunk. You know, we had drought conditions in 2021. In Manitoba here up in the northeast corner in Asheron country, they had terrible wet conditions in 2020, and everybody remembers last spring in the later calving season in April and May, we had the worst calving weather. We had 4 weeks of Colorado lows that came in and just destroyed the calving season. You know, we had customers and people that I've done business with north of Brandon. Some of these guys have 400 cows and they lost over 30% of their calves, and they just loaded those open cows up and they just send them to market, and they haven't been able to replace them because they sold those cows on an 80-85 cent market, maybe a buck if it was really, really good that day. And now they're looking into the market, and if they didn't replace in the fall, and a lot of the guys didn't, we're looking at $2,500 cows now to replace them, and that's not an encouragement at all for these guys to get back in. There's been poor profitability for the cow calf guys, and I sympathize with them because nobody works harder than the cow calf guys. And that's causing guys to get out of the business or not rebuild their herds back up again. And we have producer fatigue, and guys just last spring broke their spirit. And they literally, guys that I've known for 30 years, put up their hands and said, I can't do this anymore. It's just too much work. We backed our calving off to get away from that. They used to calve January and February. They thought they were going to get into lesser work, and it was a freak of nature that we had those 4 weeks of bad weather. But the fact is we had it, and a lot of these guys just give up the ghost. Next slide, please. We talk about profitability, and this is on the far right-hand side here is what I really like to take a look at. The orange bars in that graph are the cow-calf guys. And so again, 14 and 15, we had really good profits, compared to other years. It fell out of bed in 16. We recovered slightly in 17 and 18, and we've had just meager to below average profitability in the cow-calf sector right up until 2022. The reason I included this graph was not to depress you guys that are in the cow-calf business. I wanted to show you
it's working.
Who's making the money. Who's making the money? The green. And who is the green? That's the packers. If you look in the last from 2020 on, actually from even 2018 on, the green bar is showing a very healthy profitability on the cattle they're killing. Some of those guys were making, companies up here were making anywhere $500, $600, $700 per animal profit on what they were slaughtering. And if the packers aren't prepared to trickle some of that profit down into the system, so the feedlot guys, the backgrounding guys, and the cow-calf guys get better paid for what they're doing, we're going to see a lot less factories. And the factories are the cow-calf guys. And those are the guys that are in that, orangish type of bar, and it just hasn't been there. But we're going to see moving forward where that orange is going to move up quite a bit here in the next 2 to 3 years. Will it be sustainable after that? That's a tough one to call because we don't know what we're going to have for grain supplies and feed supplies and everything else. And we know that the cost of inputs, the cost of equipment is rising faster than what the cattle prices are rising. So, this year you're going to really enjoy the fall run when it comes. And if you're selling your calves now, you're enjoying picking up the checks. But the cost of producing those animals is going to also increase along with the increase of the calf prices.
Rick,
Next slide.
Rick, how does that green bar, like how does a simple cow-calf producer in our industry have, like how does that green bar correct itself where the packers take less of the margin and the cow-calf producer gets more?
Well, I think one of the things that's going to happen, one of the exciting things in the business that's happened since Christmas time is we got American packers that haven't taken Canadian cattle for 2 or 3 or 4 years now are reaching north of the border to get fed cattle. And the big three in the West have had their control on the fed cattle market for a long time, and we're not as a cattle buyer now. And I still move a few fed cattle for some of my customers in Manitoba. There's not very many guys finishing cattle in Manitoba anymore. Yep. We're not salesmen anymore. We're a bid taker. We've got 2 packers in the West of any size and a third packer that's pretty much Alberta based, and so they offer you the price, and you either take it. And a lot of times we were 6 weeks out before we could get them killed, or you weren't going to be able to sell them to them. And now we're getting some options. We're seeing in Ontario and Quebec that the Moyer plant in Pennsylvania, which was a big buyer of their fed cattle and a big buyer of Manitoba calves that were finished down there, are now taking cattle. They were off the market for 2 years. We're seeing more American packing plants in Nebraska. Not starting to look towards the north and are saying we need to be able to reestablish our contacts in Canada to get some fed cattle. Now, once we start moving some of those cattle south, that shorts these guys. If they want to keep that plant running and keep that chain running, they're going to have to pay more. And hopefully when they're paying more, that'll trickle down, because the feedlot guy's making money, he'll spend more money on the calves from the backgrounder, and the backgrounder will spend more on the cow-calf fair guys. So, it all runs downhill, and hopefully we'll see that green shrink, and we'll see the rest of the colors expand as we move forward. So, on the Canadian side, Western Canada cow slaughter in January, we were killing 9,000 cows a week, and that's huge compared to where it has been. It's not quite as big in February. It won't be quite as big in March because we've moved through that captive supply that we had over Christmas time. The packers have harvested that captive supply, and you'll see those packers in December buying cows starting at the first week in December to stockpile those cows so they've got cows to kill over the Christmas break and into January. And, we had a pretty stagnant cow market right after, the first part of the year in the first 2 weeks of January, because they didn't need to buy cows. They had lots of them around. We saw non-fed cattle, and that's the cows. We predicted when this was done here about 3 weeks ago that we'd see 15 to 22 in the first quarter. Well, I was in Killarney today, and we saw about 21 cows there today already. And if we look into the hamburger market moving forward and the few number of cows that are going to be available to kill, because we don't have a big dairy industry here in Canada, especially in the western side, we could see $1.45 cows live here in June and July. There won't be a lot of them around, and if they're in the hamburger market, they're going to have to reach out. Now, do you keep your cows to then? That maybe doesn't make sense, but we got a surging market in the cow market, and supply and demand. The supply is dried up, the demand is strong. Bull prices moving.
I'm wondering that 9,000 cows per week, what is that number normally? Like, what is the historical average for January, say 21 or 20?
It would be closer to 45 to 5,000.
Oh, wow.
And that bounces around a lot because it depends on whether or not, if it looks like we're getting some resistance on selling, the packers will just kill more cows up here. It's easier to send the product across in a box than it is to send it live. And they've been increasing their cow kill by quite a bit. And even Carmen opening up here in Manitoba made a positive influence on the cattle business because they're killing cows. Are they buying all Manitoba cows? Not a chance. They're bringing cows in from Quebec. They're bringing cows in from BC. Because they can buy those, shellier cows out there quite a bit cheaper, but they've made a positive impact, on the cattle market, on the cow market, especially not so much on the fed cattle, but on the non-fed cattle. So just going to talk about the bulls there is that, it's US driven. Almost all the bulls end up going south. So we watch the exchange on that. We should see a pretty strong bull market throughout the remainder of the year. We'll see that seasonal dip here in March and early April as we get all the trade-in bulls coming in and all the bull sales that are happening, a little more supply, but the demand on the bulls will be good moving forward as well. So this just gives you an idea of where we're at in the Canadian cattle numbers, and that's courtesy of our good friends over at Canvax. 206, that's BSE days, and we were right at the peak of where we had been since 1970. We've saw a big decline in the cattle numbers, and I think that we're going to see that decline to carry on for 2023 and into 2024. Then we'll probably saw some significant rebuilding, and we'll see that level out. But it just gives you a good visual as to where we are in our numbers compared to where we were. One of the good news items, in the business is the feeding capacity. In Western Canada, the feeding capacity is expanding, and that keeps our cattle at home. We get the synergies of feeding them here in Canada, and we've seen a lot of consolidation in the feeding industry in Western Canada. The big guys buying some of the smaller guys out, and we saw a lot of retrofitting of feedlots that had quite a few miles on them now are being retooled and re-put back in. There seems to be a very aggressive frame of mind out there to expand, and part of it is driven by, if they are in business, they're probably going to get grandfathered. We know that the rules and regulations for everything is under the microscope here in the cattle industry, and a lot of the guys are investing money now to position themselves for the future. They need to keep those pens full. Empty pens don't make them any money. So once they get the cattle moved out, they're looking at replacing those cattle, and they want to keep them on our side of the border. As a matter of fact, in the last 3 years, we saw a lot of American cattle coming into Western Canada and Eastern Canada to feed. Out of the West, we saw a lot of cattle coming out of South Dakota, Montana, into Alberta to feed. In the East, we saw a lot of cattle coming out of Missouri, Kentucky, North Carolina. And you think, why would they bring in cattle from North Carolina into Southern Ontario? But if you look at the map, if you're feeding in the London, Ontario area, it's closer to bring cattle transportation-wise in from North Carolina than it is to haul them around the lakes from Manitoba and bring them back in again. So, we've got a lot of things that influence who's buying what, but we are seeing a movement of cattle, in the future, and probably, not for another 5 to 10 years, but we're going to see more of a north-south movement rather than east-west movement. Transportation costs have got extremely high. Animal rights, we've got driver rules, we've got new feed regulations for cattle that are in transit that are making it more and more difficult to haul cattle from Alberta to Ontario, even from Manitoba through. Manitoba, closer to home, we're a great backgrounding province, and that's where our niche is. We don't finish cattle anymore. We can't sell them. There's too far to truck them, but we've got a great backgrounding province. And why do we have that? Availability. Well, the guys in Ontario, Quebec, somewhat in Alberta, and even somewhat in the States, they like backgrounded cattle. Cattle that have been on a ration for 100 days, that have had all their shots. They've got their pens all figured out as who's who in the zoo and the pen, and they can move these cattle when they've got pen space, not at the mercy of the market when they have to, come to the auction mart and buy those cattle, and maybe they're there, maybe they're not there. They can plan ahead. Everybody's planning ahead. Management is so important in all levels of the cattle production business, and Manitoba being geographically where we're at, we're perfect. We're the closest to Ontario, and we've got some of the best genetics in Canada. They like those crossbred calves that are going that way. I can ship cattle to Nebraska for the same miles as going into southern Alberta. And so we've got all the buyers, all the demand is looking at Manitoba, and that really supports our local calf trade. If we had to send all the wet-nosed calves in the fall directly to feedlots, we would run out of feedlots in the West before we'd run out of cattle. But with the backgrounding capabilities we have here, that's what makes our market quite a bit stronger. The grass yearlings, they've moved to larger operations, especially in Manitoba. We don't have guys anymore that do 50 or 100 grass cattle. If you're not doing 500, you're not in the game. And, it's hard to compete with the cow-calf guys for grass. And the cost of grass now, if you're out, buying it or renting it, it's almost as economical to leave the cattle in the feedlot on a really light ration. Then you can control the gain. You have the opportunity to have access to those cattle to sell them whenever the market hits the peak. And we're seeing more and more guys that are walking away from the grassing of the cattle and going to, light feed confinement. Next one. This gives you an idea in Manitoba or Alberta and Saskatchewan. We don't have data in Manitoba, unfortunately. None of our governments, whether it was NDP or Conservatives, think that agriculture is worth spending any money on. So they've pretty much taken most of their support staff away from us. But it gives you the idea here. Your dotted line is 2021. The green line is the 5-year average, and the blue line was 2022. And it gives you an idea just to where we're at. We look at the increase in the number of cattle that are being fed in Alberta and Saskatchewan. Again, reinforces what we talked about expansion in the feedlot business in Canada, especially in Western Canada. Next slide. You want to know where the cattle are. Well, this is, the total inventories of cattle in Manitoba. We're sitting at about 915,000. That's 30,000 less than what we were before. We saw a decrease in Saskatchewan. We've seen a decrease in Alberta, a little bit of increase in Ontario, but it gives you an idea what the trend has been from year to year, 2021 to 2022. You can move on to the next one there. Joe, is good. Bred cows. What's the bred cow thing going to do? Well, bred cow prices recovered at the end of 2022, and they've really taken off in the last 3 weeks. And don't ask me why guys would not buy cows at $1,700 in November and are willing to pay $3,000 for the same cows here in 1st of March, but that's where the market has gone. The prices for the good reputation cows, are trading. Well, when I did this a couple of weeks ago, 24 was the top. Whitewood had a great sale. Burden had a great sale, where we're tickling $3,000 on cows and $3,400 on bred heifers, something that I didn't think we'd see this quick. But certainly it's refreshing to see those animals going back into the herds. Bred heifers were in short supply in the fall, and they were trading from $1,700 to $2,450. A lot of those heifers were worth more open than they were bred. And I had a customer over in the Carlisle area that had some really good Angus heifers that they had bred, and we couldn't get $1,750 for them on a cash basis. So we put them on electronic marketing through Team and said that they were bred, that they'd been exposed, they were preg tested, they were in calf, and we sold them by the pound, and we netted them back $1,847. They went to a feedlot, and the feedlot was going to abort them, and that was just the way things went. And Now we've seen it turn around where guys are reaching out, trying to find some heifers, and they're in pretty short supply right now. And of course, supply and demand, we've got a very good price. I think the cows, and this is maybe outdated here now, but up until the end of January, if you could buy good cows for $2,000 or less, I thought they were a great investment moving forward, because a $3 calf at 600 pounds, $1,800 for a calf off that cow next fall is going to be achievable. And so the debt load on that cow, is almost zero after a year and a half with the salvage value on her. And I couldn't believe that we could not get guys to buy cows because they had feed. They just didn't have the desire to do it. And they weren't sure, what kind of winter we were going to have, and et cetera, et cetera, et cetera. And, there was some great opportunity for investment and expansion. That boat has sailed if these market prices stay where which we saw in the last 2 to 3 weeks on the good quality cows. Now, Rick's advice is that if you're going to a cow sale and you see you guys got 4 or 5 or 6 cows at the cow sale, I don't touch them for anything over market price, because we've had such heavy culling here in the last 2 years. Anything that didn't carry its weight has already gone to town. You know why those cows are there. And if you don't, you're going to find out when you calve them. Stick to those good reputation herd dispersal cows. If you have to pay a little more, fine. I'm not saying that you pay $3,000. I'm not sure that the debt load can be handled on those cows at that kind of money with the interest rates going up, even with the higher calf prices. But there's a happy medium in there someplace.
Rick, I just to touch on that point about bred cows, tough convincing guys to buy a $2,000 cow, or even in the example you gave with the heifers, an $18 heifer or an $1,800 heifer in November. I experienced the exact same thing. I talked to cattle producers almost all day, every day, and almost none of them believed that there was this optimism. I mean, they were told, they were fed the line that there should be all this optimism in the cattle industry, and I would say 90% of them just straight up didn't believe it. And I'm wondering, now that these last 3 weeks have come, who is buying these cows for $3,000 a piece?
Well, I think what's happening is their numbers are down. I mean, they're running at the bare minimum. Anything that, as I said, it didn't produce, anything that wasn't there got called out. And they're looking and saying, I've got a budget on my farm to handle 2,000 or 200 cows. I've got pasture for it. I've got feed for them. I've budgeted, my operating budget on having the returns on 190 calves, and I'm running 130 cows. I've got to get my numbers back up. And I'm seeing now that, there is some optimism, there is some opportunity out there, and I don't want to miss the boat. And I think they maybe overreacted earlier. I thought we would see this, this coming fall and next spring. I didn't think we'd get to it as quick as what we did, especially not in a 3-week, period where we were having trouble finding buyers for them, and now we can't find enough cows to fit the orders that are there. So I think it's just a mindset that people have become believers. And I think that rightfully so, there is optimism out there, but you can spend too much for gold some days too. And the market's the market, and if you're going to spend $3,000, you better get something that's really good for it. So in Manitoba, at the end of July, we had just over 400,000 cows, and we've been on a steady decline here for the last 5 years. Manitoba experienced the biggest percentage of cull rate in Canada last year. We were at 13.6%, if you can believe what the government's telling us on their stats. And the fact of the matter is, that puts us down to just 8% of the national beef herd. And I think when the real numbers come in, and we get them about the end of June for the end of 2022, we're going to see that Manitoba is not at 13.6. I think we're going to be closer to 20%, because we had huge numbers of those cows, the lost calves that weren't kept and rebred. When we bought a bunch for a couple of customers of ours because we could buy them for $1,250 a piece, they lost calves. It wasn't their fault; it was the weather, and they put them out and bred them. And the proof will be in the pudding, I guess, when they're calving this spring. But I think they were a pretty good investment. Again, we're talking maybe 20%. That would be at the high side, but I think we'll be a lot closer to 20 than we're going to be to 13.6. We had a lot of producers exit the business. Like a lot of those guys in the Asheron country sold out because it was too wet, and then it was too dry, and then it was too wet. We saw a lot of guys down here, and we had a lot of producers that went home. And what's that mean? Well, we had a big influx into Manitoba. We had a lot of guys from Alberta that came out here and bought cheap land or rented cheap land and decided they were going to ranch in Manitoba. And a couple of Januaries in Manitoba changed their mind. And A lot of those guys, you know, have packed it up and gone home or have got 9 to 5 jobs. We also had a big influence of Europeans that came here, you know, 10, 12, 15 years ago. And those guys, a lot of them have gone home. They got willing buyers for their land. Land's easy to sell. And they could get, you know, decent money for it. And it was too much work calving cows. It was too much work in the cattle business. So they've either turned it into a grain farm or they packed it up and they've gone home. And it's changed the demographics of who owns the cows in Manitoba. And we don't have a lot of people coming into Manitoba right now looking to buy cattle operations, cattle included. If they think they can till it up, they're really interested in it. But you know, we've changed the demand, we've changed the demographics. So I don't see our Manitoba cow herd expanding a whole bunch real quick. Get back to numbers where we were 2 years ago, yes. Expanding past that, no. You know, Manitoba feeder cattle, you know, in January 2003, we sold 26,000 more cattle than we did the year before. We're up about another 15% in February and March. At the markets have been really good. The numbers have been good at all the markets. Everybody's pulling ahead. The prices are bringing these cattle out. Guys can't believe it. They don't want to miss it. So we're seeing lots of light calves coming in just because of the price factor. You know, Ontario was very strong on the demand side. You know, our 400 to 600 pound steers were up 79 cents a pound higher than last year. Our 6 to 8 weights were up 72 cents, and our 8 to 1,000 were up 65 cents a pound higher than last year. Significant increases. And actually, if we looked at the March market, that we'd be a little higher than those averages right now, especially in Manitoba. You can move on to the next one, heifers. Now, this is always interesting. You know, our 400 to 600 pound heifers were up 53 cents. And if what I saw in Killarney today, I could probably tell you it was closer to 65 cents higher. We saw a real jump in the heifer market here in the last 10 days. The 6 to 8.
Rick, what was the heifer market today in Killarney?
Well, I bought Charolais and red blaze face heifers today that weighed 6 1/4, and they cost me $256, so about $1,650. And they're not going to breed; they're just going to be put on feed. Black heifers were very close to that. You know, lots of demand. We had quite a bit of American interest on the market today, and that was a carryover from the end of last week. And the American market's pretty fickle because they work on the exchange rate on the futures. That the futures cough. You know, they're like a water tap. They're on and they're off. They're on and they're off. But there was a lot of influence today from the American side. You know, the predictions are, fellas, is that the majority of the heifers sold this spring again are going to go into the feedlots and not into the breeding program. So that means that the expansion is going to be delayed, or even the rebuild. We won't even talk expansion. Let's just talk rebuild. You know, it's going to be that much longer going because I'm not seeing very many heifers going to grass. I mean, today I was buying 850 pound heifers in the mid 20s to low 30s. Those cattle would be ideal to put out on the grass to breed. They're going in the feedlot. That's exactly where they're going. So I always get the question, and I'm sure it'll come up. So I'm going to beat you guys to the punch. Why are the heifers so damn far behind the steers? You guys pay me good price for my steers and you steal my heifers year in and year out. The fact of the matter is, when the grain is as high as it is right now, I'm surprised the heifers are as close to the steers as they are, because the conversion rate is terrible on heifers compared to steer. The cost of gain is going to be higher. We've got all the teenage pregnancies. We've got all the rest of the stuff that go along with feeding heifers. And the resale value. If I take 600 pound heifers and take them to 900 pounds and put them up for sale, you know, I may have 5 or 6 big feedlots that are interested in feeding heifers. If I do the same thing with steers, I've got 25 outlets that I can go to, and we can move as many heifers as anybody can. The heifers, a lot of these guys will only feed heifers when they can't buy steers, or if the stretch is behind them. They don't get as big. I've got customers in Ontario that are shipping out fats this week at 1,800 pounds. We'll never get a heifer at 1,800 pounds. And so the more pounds they put on, the more money they make, because they're not taking a discount on those carcasses. So that's one of the biggest reasons. And when the feed is cheap, we'll see the heifer steer spread shrink, and when the feed is high, it'll be wide. And
so
most
Rick,
of
the opportunity with the heifers, like those animals that you purchased today that are going on feed, is the opportunity not to breed them and start rebuilding the herd? Like, will there not be demand for that? And is it just a case of finding somebody to actually calve them out, whereas you've got a buyer in a feedlot that can pencil that out so the heifers make sense not breeding them?
Yeah, I think that part of it, you know, up until this week, has been that you could buy a bred cow for a heck of a lot, you know, the investment, and you've got to return this fall, where the heifer's a long time, and if you breed 10 heifers, you'll get 8. that probably are going to calve successfully for you. And in 2 years after that, you may have 5 of them left in the herd. You know, it's a long-term investment. It's a patience type of thing. And so I think, you know, that's one of the reasons. If we were seeing bred heifers at 3,000 to $3,400 and bred cows at 3,000, there'll be some guys hard look at breeding some heifers. But right now, we haven't got them convinced that that's the place to go. They still think they're going to be able to find cows because they get that return on their investment that much quicker. So for 2023, I think in the fall, we're still going to see some pretty wide price differentials between your steers and your heifers. You know, at the peak, it could be 45 cents a pound, and it's just due to the high cost of feeding these heifers. You know, the spread will tighten once local producers decide to retain heifers for breeding into their cow-calf operations, or they look at it, you know, purchasing heifers to breed. And we've seen it before. I've seen it many times in my 43 years, where in the springtime, good replacement heifers brought the same or more pennies per pound than what a steer brought. But it's been a while since we've seen that, and it'll be a while yet before we see it. But the potential's there. You know, we have to have that local demand to push those heifers to tighten that spread up. Next slide is good. You know, the demand for the feeder cattle, Ontario is a major influencer on the Manitoba feeder cattle prices, and it always buys more steers than heifers. You know, Ontario is being our bread and butter ever since I got in the business, and the business there is still very active. There's still a strong demand for cattle to be fed in Ontario. They don't have enough cows of their own. They got to bring them in from someplace. We have the genetics, we have the geographic location. We've got everything going for us here in Manitoba to catch their attention. You know, the purchasers from Quebec have declined in 2022, and a lot of that was due to the contraction in the feeding industry. They don't have the subsidy plans that they had a few years ago, and a lot of the farmers there, you know, if they're young guys, have never farmed without subsidy, and they're having a tough time on the open market. Up until a few weeks ago, they only had Cargill and St. Helens to go to get their fed cattle harvested, and Cargill was being pretty cruel to those guys down there, and there just wasn't a want to finish cattle. There's a lot of finishing barns in Quebec that are empty, and the increased trucking rates into both Ontario and Quebec, you know, we're paying as high as 18 cents a pound out of Manitoba to take those cattle there. We have to stop them at Thunder Bay now and feed and water, and that's another $600 a load. You know, you add that onto the price you're seeing today on these calves, it's a phenomenal amount of money to get those calves down there, but they're still hungry for them. You know, Alberta ranks second to Ontario for Manitoba cattle. The Americans put in the floor price, especially on the heifer calves, and as I mentioned before, they're hot and cold. And we have a real good local demand for grass cattle. We still got those guys that are running, like Norman Anderson, that runs 6,000 grass cattle and has another 8,000 in the feedlot on a light ration backgrounding, and he just got filled up here this week, and that's really helped out on our local market here in Manitoba. So, you know, the demand for Manitoba feeder cattle, we've got as good a feeder cattle as anybody in the countryside. We can stand head to head with them any day. And we've got more guys looking at our cattle in Manitoba than they do in Saskatchewan and Alberta when it comes to different, you know, buyers from different regions. Next slide is good. So what are we looking at? The futures market supports the current cash markets. I mean, you know, prices, and I get a lot of guys will phone and ask me what I'll pay them for their calves, and I give them a price, and they'll say, well, gee whiz, you know, I saw on the internet that these cattle brought 10 cents more, 8 cents more. And they fail to look at where those cattle are being sold, and if that's a delivered price or whether that's a farm price. And so if you're pricing cattle in Manitoba, just something to keep in mind, you know, if you're delivering to Alberta and you're west of Brandon, it's about 7 cents a pound to get them out there now. If you're in between Brandon and Portage, it's probably about 8. And if you're east of Portage, it's going to be about 8.5 cents to get them, you know, into Alberta. As I mentioned before, it's costing us 16 to 18 cents to get them into Ontario and Quebec. Now, but you take a look at some of the actual prices, and these are actual sales, and these are steers, you know, for August delivery off the grass at 850 pounds, 274.50. An 850 pound steer today is worth 255 to 257. September delivery, you know, off grass, they're even higher, 281.50. We had some 1,000-pounders that delivered to Alberta at 265, so that puts them at 255 here right now. There's contracts out this week for 250 at 1,000 pounds, and I think they'll be higher than that when the cash market comes in. We had some heifers. This is a customer of mine, just sold some last week. He sold 1,000 of them for September delivery, 950-pound black and red heifers, and he got $249.75 for them. You know, tremendous price. We were hoping for $240. We exceeded that by 9, almost 10 cents a pound. The guy was doing backflips. But when we get those sold and he goes to replace them, he's going to get the same sticker shock when he goes to rebuy. If you look at the Western Canada Index for the end of February, a 620-pound steer, was 303.41, and that was up about 4.5 cents from the previous month. But our cash price in Manitoba was 308. And that just gives you an idea how much of a positive basis we've got because of our location and because of the cattle that we've got here right now, that we're running ahead of the game. Next slide. So risk management. Well, one of the things that I tell the cow-calf guys, especially for your fall calf crop, is to consider the livestock price insurance program. It's the only thing that really works for a cow-calf guy. It doesn't work if you're buying cattle too often, because if you got to pay that big premium, you might as well take a position on the futures market, either a hedge or an option on there. But the livestock price insurance program will allow you to manage the potential downfall in the market. And any good investment guy will tell you, cover the downside first. Don't worry about the upside. It'll look after itself, but cover the downside in the event of a disaster. And it's important for you as a producer to establish your level of insurance that you need for your break even. You may not need the highest coverage, so you may not have to pay the top premium to get that. I like to liken it to your house insurance. You buy fire insurance so that if your house burns down, you're not in a wreck, and that's what this is. You may not like the premium, but you do it to cover the downside, and I think that's extremely important, and it's extremely important to establish what level you require for your cost of production or your break evens. Don't let the cost of the premium scare you away. Rather, look at the coverage you need and then the premium required to buy that coverage. So many guys saying, well, it's $85 a head. I'm not giving them that. What are you getting for that $85 a head? And if you watch that price insurance, it gives you an idea of what the market's doing. If the coverage goes up, well, then you know that the market has gone up. And if it comes down, you know there's been some pressure on the market. It's not foolproof and it's not perfect, but it's the best thing that we've got. And as a cattle industry people, we have fought to get this thing in place for so long that now we've got it. It's nice to see that we're getting some producers to use it. If you're thinking that you're going to make money on it all the time, you're not. But it's the only price insurance program that you have a chance of getting some of your premiums back. So, take a look at it very, very closely. We can move on. I get 1,000 questions every year about forward contracts. Can I get a forward contract from my calves, or, what's the forward contracts doing? And there are forward delivery contracts available in Manitoba. We do a lot of them with JGL. Some of our competitors do them as well. They don't always work so great for cow-calf producers because you need semi-load lots is what you need, 60,000 pound a minimum lot of uniform cattle, and the bigger the volume, the more loads, the more interest you're going to get from the buyers on forward contracting. They don't get excited too much about 1 and 2 loads, but they will do it. One of the things that you'll find is most of the buyers will ask you as a seller for an asking price before they even start talking about contracting. They'll say, okay, Joe, what do you want for your calves in the fall? Hey, what are they going to weigh? How many you got, and what do you want for them? Well, gee, I don't know, Rick. That's why I'm asking. Well, if you don't know what you want for them, you're not going to sell them to me. And the contracts change daily, almost hourly at times, with the board moving and the exchange moving and everything else along that way. So we don't like to talk about, we'll give you, $2 or $3 today for your fall calves, because tomorrow that could be on the wrong side of the fence. It could be behind. And all you're going to remember is the $3, and if somebody else offers you $3.02, well, you're going to sell them to them. Till the guy's right ready to sell, and he really, is interested in doing it, you get all your ducks in a row, then that's when they'll get some frank discussions about contracting. The contract prices, as I mentioned, change daily. They're subject to caveats, such as border closures. And that's one thing a lot of guys don't understand, that every contract from every legitimate place has a caveat in it. If the border closes, the contracts are no good. We know what it's like when the border closed, so it's not foolproof. And the one thing for sure that I can tell you, whether it's whoever you're doing it with, if you are doing a forward contract with somebody, know who you're dealing with. Know that they have the wherewithal to pay for those cattle, and that they will stand behind that contract if the market moves against them. Because we saw that happen a couple of times in the fall, where some forward price calves were way over the market on delivery time, and a lot of the feedlots were scrambling to try and find a way of getting out of those contracts. And the majority of the guys in the business are pretty darn good, honest guys, but you need to know who you're dealing with. Exchange rate is something that's really important. And if you're watching the market, you really want to watch the exchange rate. The Canadian dollar, dropped from 79 cents US to 73 last year. 1 cent change in the exchange rate moves the price on a 500-pound calf 6 cents Canadian. And a lot of guys don't realize how significant that is. You get into a 1 cent change on the fat cattle, moves at 2.6 cents per pound. The increase in our fall calf prices, if you go back to, December and November this year were pretty good. The year before, December market absolutely collapsed. And the guys that sold their cattle in December, were not compensated for them, fairly at all, but that's where the market was. This year, it stayed good all the way through December. Why was that? Well, it was a dollar-driven market. It was an exchange-driven market. It had nothing to do with the supply markets. We haven't seen the supply-driven market hit full stride. We're seeing just the start of the race here in February and early March. Throughout the 2023, we're expecting the dollar to run between 74 and 77 cents, and that will make predicting the cattle market a little bit easier as we move ahead. We can go on to the next slide. So watch that exchange rate. It's really important. This is just, again, a graph to give you a better visual. You look in from week 41 on, the dollar really tanked. It came back a little bit, but compared to where it was for the rest of the year, that's why we had a good fall calf market. That's why that market stayed good throughout the entire month of November and December, was because of the exchange rate, not because of supply. We can move on. Feed prices, drought conditions, US drove grain prices down there to record levels. I mean, $8 corn in the South. Americans like feeding corn at $5. $6 makes them nervous, and $8 they absolutely hate. And up here we had the same thing. If you want to watch what the feed market is doing on the cattle market, pay attention to the corn prices, because they have the biggest influence on the cattle market. Barley prices aren't that relevant anymore. Most of the good barley is either going into the distillers and the millers, or they're going into the pork business. It's the corn, and we see a lot of Alberta feedlot operators are importing corn from the US on a regular basis to meet their needs. Corn prices and feed costs in general, we expect that they will decrease this fall, but we're expecting some kind of a drop this spring, and we haven't seen it yet. It hasn't held back the cattle market, but is it sustainable moving down the road? We're going to have to see a slight dip. Some of these guys have already built into their price predictions and their buying power today that the grain is going to be a little bit cheaper and the cost of gains are going to be lower. So if we don't see it, we may put a cap on the calves, but I think we will see, once we get it in the ground and we get some harvesting done, that we'll see it break a little bit. Fed cattle prices, everybody that buys cattle takes when those cattle are going to die, and then they move that formula backwards to determine what they're going to pay for the feeder cattle, because that's the only thing they have total control on, is what they pay for the feeder cattle. The cost of gain, again, we got conversion, we've got everything else that comes into it that you don't have much play in, especially as an investor. The Canadian packers have contracted enough cattle for the first quarter of 2023 to control the cash market. We saw in the last 10 days, now we're getting into March, where they're starting to reach out and they're paying better prices for April. The futures market, we saw a low of $211.75 in February to a high of $221 in April. We've exceeded the April price here now. Some of the Alberta feedlots in January were offered $220 in December. Now they're at $230 to $235 for December, and that's a good $4 to $5 over where the futures market is. Current cash price in Alberta right now is $201 live, or $335 to $336.5 dressed. Pretty good markets, but still the guys that are feeding those cattle at the high cost of gain are not making huge dollars, but the potential is there that we're going to see considerably better prices in the fed cattle market here in the new year, and that's going to influence what the calf market does in the interim. And the more pounds we can put on those calves and a feedlot business, the happier we are, because that's where our profitability is going to be. We can move on to the next one. The Canadian cattle slaughter, we were up 21,000 head last year. We're down 50,000 head in the steers, and that's a mystery to me. I haven't been able to figure out why we dropped that, but we made it back up on the heifer market, because we were 52,000 heifers more than the year before. We're up 20,000 cows. We're down 1,900 bulls, which really doesn't make a whole bunch. Our Western Canadian cow harvest was up 5.4%, and that doesn't include any of the exports of live cows to the US. In Manitoba, Saskatchewan, even somewhat out of Alberta, we move a lot of cows into, especially into Long Prairie, into Minnesota. They are big buyers of Canadian cows, because we had such a big call in the US. We had, the Americans getting a lot of their own domestic cows, so they didn't have to reach up to Canada to get the cows. That allowed the Canadian packers to be even more influential in what was going on. We can move to the next one. Packer utilization, Western packers, last half of 22, they ran at 96% capacity, and that's higher than normal by quite a bit. That's the tail of the tape, as they'll say. Cash sales were delivered 6 to 8 weeks. I mean, we were pricing cattle all fall. That's tightened up here now. We're probably about 4 weeks away from getting stuff killed. The Eastern packers ran at 85%, but they were current on deliveries. And we're looking on the Canadian side about 80 to 85% packer utilization, in 2023. And America's not that far off. One thing we're going to see on the American side is there won't be many Saturday kills. We're not going to see a lot of those great big, 680,000 head weeks, because they don't have enough people to work in the plants to run those extra shifts, and there's not that many fed cattle down there that they're going to need to have the Saturday kills moving forward, and that's going to have a big impact. And that's where they'll be able to keep the chains, running for 5 days a week instead of the 6. In the future, once the drought in the South and Western Canada is over, supplies of cattle are going to tighten. The cull cows will be reduced, shorting the number of slaughter cows. That makes higher prices. Producers will start to retain some more heifers for breeding. That also short the feeder supplies and keep those steer prices active. We've not seen supply-driven peak prices yet. We might think so, but we're just starting to the beginning of the race, as I mentioned. If I'm right and we get a decent crop here this year, we're going to see tremendously good calf prices this fall. And that's where we're really going to see the impact of the supply-driven market versus the dollar-driven market that we saw at the end of last year.
Rick, I was going to wait for question time, but you care to venture a guess? And I understand there's some variables at play there, but if you're right, and let's say the feed market stays status quo, what do you expect?
If it's status quo, we could see, a good 600-pound steer at 320. If we get cheaper feed, we could see them at 330, 335. For a 6-weight steer. That's where we base a lot of our pricing off of. It's going to depend on the cost of feed, and that's regional. The Ontario guys could have quite a bit cheaper cost of feed. They usually have pretty good crops down there. There's a lot of things that are going to influence. A lot of it's going to be the dollar, but we need to get cheaper feed, and anything that we get on cheaper feed will be relayed right back into the calf prices. So, as a buyer, am I comfortable paying that for steers? Absolutely not. But that's where the market's going to be, and that's where I think the cow-calf guy is going to be smiling pretty good this year. But you got pounds to sell, and the one thing coming into the fall is you can't sell 400-pound calves and make any money. That cow costs you the same as what the cows are producing 600 and 700-pound calves. So management of the program, management of your cow herd, all that is so very, very important moving forward. So here, we're starting to see some consumer resistance on beef prices, and I just put this in here just to show you the differential. The red line at the top is the beef prices on the consumer price index, and we get the green as the poultry, and that's right at the very bottom, and the blue is the pork, and it's scooting along just above the poultry. And what ended up happening, in the US at the end of the year, their exports for both the pork and the poultry declined considerably. And when that happened, the price domestically went down. So if you look at the spread between, the beef prices in the store and the pork and the poultry, it's not unreasonable to think that we're going to see consumer resistance for the beef prices moving forward. If you're on a flat wage, you got a family to feed, beef is going to become a luxury food. It's a luxury food right now for anything over a hamburger. Why is it so strong? Well, because we are having to outbuy the exporters for our own product. We used to use about 60-65% of what we had in Canada, and we sold the rest of it to the US, mostly at a discount, just to get rid of it. And we had fairly cheap food. We've done such a good job of developing export markets, and the US market has got very well into the export business as well, especially into China, which we don't have legal access to right now. So we're having to outbid foreign buyers to buy our own product at the store. And that's why, it's high. And when you go in and you look at any of the meat cuts, especially the steaks and that, it's a luxury food. When you start, I'm not saying that the cow calf guy or the feedlot guy's making all the money, but the packer is making lots of money because he can sell everything that he's got at a premium price. And you look at the price differentials between pork, poultry, and beef, how much higher can the beef get domestically here before it peaks out? So just a comparison note that, the packers are going to have to pay more, but they're going to have to eat into that green line that we saw earlier on. That's where some of it will be playing catch up. We can move on a little bit, I guess. I'm all full of optimism today, but I'd be lying to you if there wasn't some potential downside. So we need to just quickly look at that and then put it to bed. We talked about resistance in the beef prices. It's real, it's out there. To support higher prices, the export market must continue to be strong for both the Canadian and US products. Interest rates are getting higher. It costs more to stock a feedlot. It costs more to do the feed while you're storing that. It costs more to do business, whether you're a cow calf guy or a feedlot guy. Interest rates, and we haven't seen these kind of increases for a long time, and we're not done with them yet. Trucking rates have doubled in the last 3 years. We talked about the cost of moving cattle, and it just gives me the willies when I got to start paying $16 for a truck to go. And those guys aren't making any more money than they were when they were charging 10. It's the fuel costs, it's tire costs, it's replacement for that particular truck. Input costs for the cattle producers are rising faster than the cattle prices, and that makes profitability questionable in the future. That margin could be tighter. We're going to see a couple of good goes here, but if all your inputs and all your costs keep rising, we need those calf prices to be sustainable to keep a decent margin and keep the factories in business. And we have to see these feed grain prices drop to see continued higher feeder cattle prices. It's just a fact of life. If we stay at $10 corn up here and $7 to $8 corn in the US with the exchange, it's tough to make a buck on feeding those cattle. We can move on. Despite the reduction in the cows, we produce more pounds per beef per cow, and that's the genetic side of it. Cows now produce about 41% more beef than their offspring than they did 50 years ago. And I haven't been in it that long, but I remember back in my 4-H days when the fat calves were 950 pounds, and that was considered a prime animal. And now that's just a big feeder calf. So we're producing more beef per cow than we've ever done before. And one of the things that we don't see a lot of in Canada, but we're seeing it in the States, and it's going to have a major impact. When we talk about being short of beef or short of cattle, we might be short of cattle, we may not be as short of beef as we think, because dairy farmers are now using sex semen and breeding their cows to Angus bulls, and these calves are way more popular in the feedlots than what the Holsteins were. There's less discounts at the packers than on the Holstein steers, and so they call that beef on dairy cross is what they call it, beef on dairy. If you hear that term, that's what they're talking about. Last year, they represented 7% of all the beef that was produced in the US. It's predicted to be 15% for 2024. The dairy business in the US is growing, and the beef business is going backwards. So that's going to
can you just touch on, that's a big number, 7% to 15%. What does that mean? Sexing, I guess, like sexing the semen, and then obviously to get a purebred Holstein, but then you only need so many heifers, so then you're crossbreeding those Holsteins, the steers, with Angus
to get a product that'll sell to the feedlot that they can sell for a premium instead of knocking those day-old calves on the head. That's basically, and hopefully there's no animal welfare people who are just listening because I stepped out of the tracks there for a minute, but that's the fact of the matter. They want the byproduct of those male calves. And those cows that don't produce good, don't have the genetics to be mothers again down the road, they're breeding those. And in California, especially, it's a huge business. We had part of that increase in the calves that came up in the States over the last 3 years. For 2 years, we were importing Holstein calves up here like crazy. They were 350-pound calves coming from the US up to Canada because there was no market in the States. Most of the packing plants weren't killing or harvesting, Holstein steers. And so they came up here, and there was one particular group that had an outlet where they were going to move this Holstein beef as a specialized, niche market type of beef, and it worked really well. Then all of a sudden, things changed in the U.S. There was demand down there. It's dried up here now. But this is the biggest movement we've saw, the biggest change in the beef business is this beef on dairy. And it was a pipe dream 7 or 8 years ago. It's a fact here now. And the reason I put it in there was that, yeah, we are short of cattle, but we sell beef. At the end of the day, is what we do is we sell beef. The dairy business is growing. There's more dairy cows out there, and there's going to be more of these beef on dairy calves. And the meat sells well. The discount is very little compared to the beef cattle. And we've taken a byproduct that you couldn't hardly give away, and now it's worth some money. So in conclusion, I think that we're going to see higher cattle market for the next 2 to 3 years. It could be even 5. Strong demand from Manitoba cattle from all the regions across the countryside. It's the best place in the world to be, if you can put up with the winters here, to be in the cattle business, because we've got more demand for our calves than a lot of places do. Profitability be a challenge moving forward with the increased input costs. But now I think it's still the time to rebuild, not later. If you have the infrastructure, if you can get financing, if you've got the land and you have the desire to build your numbers back up to what you were, now is the time to do it. I'm not saying that a young guy getting started, you want to jump in and buy 200 cows today at today's price. But if you've got some equity in your herd and you've got that infrastructure, you can get the financing. But the desire, to stay in the business, now is the time. Like I've said so many times and to my producer friends, keep those 2023 newborns alive, guys, because they're going to be worth a fortune this fall. It is going to be worthwhile going out to cab them. And, I was told a couple of times by a couple of guys in the business that are no longer with us, you hang on to that old cow's tail, she's going to pull you through the shit. And it couldn't be truer than what it has been in the last few years. And we're getting to the end of the shit pile. And so, hopefully, I'm right in my predictions. I'm not normally an optimist. I'm a realist, but I see a lot of good things here. And I'm really happy that finally we're going to see the cow-calf guys get fair compensation for what they're doing. And there's going to be guys come on here and say, I need $2,000 a calf, not $1,800, Rick, where it's not worthwhile. And every operation is different. But if 2,000 won't do it, and you've got some equity, I think that maybe you need to look at a different profession, because we haven't seen that before, and we're going to see it for a while. So that's it for right now, guys.
Rick, that hang on to the cow's tail, she'll pull you through the shit. That's not a Harold Orr quote, is it?
It might have been. My dad was one of the guys that told me, and a fellow out of BC by the name of Jimmy Gardiner, who fed a lot of cattle, was another guy that told me. And of course, with Harold, he was same age as my dad, so it certainly could have come from Harold, that's for sure.
Well, the legend lives on, and I figured there was a snowball's chance in hell we were going to get through an entire webinar on the cattle market, and Harold Orr wasn't going to come up. So Rick, we gotta.
Yeah, we're open for any.
Say we got a ton of questions that came in there. I'm sorry about the skipping around. It was jumping around on me, so hopefully that didn't distract you too much.
Nope, no, that's good.
We got there's a ton of questions that came in there that I'm going to filter through, but I think a really important, you touched on it a few times. You probably mentioned it 3 or 4 times in your slide about, and this is a big question, so maybe you don't have to go deep into it. But we're talking about optimism, and for sure this is probably the best time in the cattle industry in the last 8 or 9 years. But you talked about producer fatigue and age of producers. At what point does what needs to happen for that, I guess, the fatigue or the turnover, the new generation? What needs to happen in the cattle industry? How much sustained profitability do we need, or what conditions do you foresee happening that this can be an actual long-term trend rather than a spike and decline and everyone gets out of cows?
Well, the cattle business goes in cycles, and whether it's a 5-year cycle or a 10-year cycle or an 8-year cycle, you can talk about it. Everybody has their own opinions, and I've got to know Daryl Peel down in Oklahoma pretty well, and he's one of the best analysts in the business, and he still maintains we're on a 10-year cycle in the pricing. So we know that everything will cycle back around, and that these prices we have coming in the future, maybe not today could be average in the future, but the spikes that we're going to have, they won't last forever. And so the big thing for me is, for young guys, it's it's terribly hard to get financing. Like, I think if you go into the government programs here, and I'd have to check, so don't quote me, but I think they have a cap of like $1,800 on a cow. Well, you can't buy a cow for $1,800 that's going to do you any good down the road. So, we need to be able to react to the market changes, because what happens with the few banks that are still in the business is that they will, when they should be lending money for cattle at $1,800 or $1,600, they don't want to touch it because they're nervous about it. But when it gets to $3,000, they'll lend you all you want. And then you get into that cycle of high interest and high debt load, and the guys can't work it out. If you're not lucky enough to have a father or a relative or a good friend that's willing to sell you their operation at probably less than market value and take payments over time, it's really hard for young guys to get into the business. And you really have to love this business to be in it. And there's so much other opportunities out there on the 9 to 5 thing that's guaranteed, and weekends at the lake with your wife and kids, that it's, we don't do a real good job of selling this business, and we need to be, we're all very proud of being in this business, and we feed the nation. My customers in Quebec, when I first went there, I didn't believe in the subsidies and I thought it was a crock. But the more that I went there and I saw that there was, the money that those guys made, they turned it right back into the community. They bought equipment locally. They bought, they lived well. They worked hard, but they lived well. And all that subsidy money was turned back in. And their thought was that we're producing beef, to feed Canadians, Quebecers first, Canadians, second, type of thing, that is good quality beef at a reasonable price. And we'll sell the rest to the world if need be. But, we're feeding our own country. And I'd sit around the table with producers, and I'd say to their kids, what are you going to do when you get out of school? I'm going to farm. You say, Dad, what do you think about that? Well, of course, there's a good business here. There's a good opportunity, and we want to continue on. In Western Canada, we were telling our kids to go work on the oil rigs. That's what we were doing, because that's where the money was. And it's hard to get them back into the deal. Our demographics are moving upwards in the age, and the herds, just the economics alone, we're going to have to get bigger to be sustainable. And the 50 head guy will be the hobby farmer in the future, I think. But they got to be able to get financing and realistic advice and guidance on getting into the business, because this anybody can buy the cows, but you got to be able to raise them. You got to be able to manage those herds. You got to manage your resources. And so it's a tough thing. I've said many times in the last few years, I'm 67, that I am glad I'm coming to the end of my career, because I wouldn't want to be starting today. I don't see that there's it's an awful lot of work for what you're getting out of it, and the risk that you take for the dollars investment is the highest it's ever been.
Well, the risk on let's just, for round figures, because I'm not that good at math, but the risk on buying a $3,000 bred heifer, let's say at 10% interest, that adds $300 cost to your cow calf production. And the worst thing is that, that market could turn against you. That cow is now worth $1,800. You lost the equity and you're still paying interest as if she was a $3,000 heifer, right?
Yeah, and that's what happened the last time we had the big expansion. The prices went up. Everybody wanted to get in the game, and the banks were late coming to the table, and then all of a sudden you could get money. And unfortunately, farmers, if they got $1, they'll spend $1 or $1.05. So it just fed on itself. And I've never been a believer that $3,000 cows could make any money, what we saw before. And maybe I'm just old fashioned, but I still preach a little bit of caution. I think you need to get back to the numbers you were, so that you can make that farm work. But you have to be patient, and just because the market says it's 3,000 or 3,500 doesn't mean that there isn't other deals out there. There certainly is opportunities.
Rick, we got a ton of good questions, so I did have a follow-up, but hopefully we'll cover it again. Yeah, there's some really good questions here. I'm going to try. Hopefully we can get a chance to get through them all. This one, we had several guys ask this question, and it's kind of a sad state of the industry, but I think it's fair to be honest for the shit that cattle producers have gone through, over the last 20 years. If a producer is looking to cash in on equity in their cow herd and start again, when would be a good time in this current market upswing? And when do you predict would be a good time to get back in?
That's a really tough question, because, if you're selling out and you're thinking of getting back in, like, really at the end of the day, if you've got a young herd, why are you going to do that? you ride the horse to the end of the race. If you're older and you got, like I kept for the last 2.5, 3 years, I've told those guys, don't sell your cows, hang on to them. It's going to get better. There's an opportunity coming here. It's going to be patience to get into the deal. And, cattle industry is hard to get in and out of because it's a long cycle. By the time you buy the cow, you calve the cow, you wean the calf, you sell the calf, rebreed again. A lot of things can happen. The peak of the cow market, I think we'll see the peak of the cow market probably in 2024. Will be the highs of what we're going to see. At that time, if they get as high as what they possibly could get, we'll see a lot of heifer retention because guys will say, I can't afford to buy cows, so I'm going to keep more of my heifers and I'm going to breed them, which is a good thing. We got to keep that cow herd young. Somebody's got to do it. But, to jump in and jump out, I'm not sure that's a real, strong business plan. I mean, it's when we get past this cycle, and if it's a 10-year cycle, well, then, we're into 27 to possibly, 30. That's a long ways out. A lot of things can happen between now and then. I'm more of a short-term cycle guy. A 5-year cycle is kind of what I watch and see the changes, that have been happening. So jumping in, jumping out, I'm not sure. And a lot of it's, you gotta look at your tax strategy. You've got to look at everything else that you're doing. The guys that feed cattle don't get out of feeding cattle. It's we have a Cattle Feeders Anonymous group that meets every so often and says, hi, my name is Rick and I feed cattle. And it's one of those deals where it's, there's certain things at play right now. If the government was to change and disallowed the profits or losses on cattle feeding for these investors, we lose a big chunk of our cattle feeding equity, because we have a lot of guys that are not in the cattle business per se day to day, but own a lot of cattle and feed a lot of cattle. And we've got a lot of feedlots that feed their cattle, their own feed, and sell their feed through the cattle at a pretty good profit. And if the cattle break even or make a small profit, they're happy because the farm's making good. So there's so much at play here right now but I guess to go back to your question, if you're going to sell your cows, probably 2 more years, depending on the age of them. If you're in middle age and up now and you got 9-year-old cows to sell, that program's off the table. But to buy back in, like everybody is excited. All the cattle I bought, back counter cattle I bought in January and February, guys were just ecstatic to put pen to paper on those contracts. And then when we went out to replace them, they're going, holy moly, I didn't realize that this thing was going to happen. Like we saw those heifers jump so much in 10 days to 2 weeks. They look like really good property. I'm not so sure they're good property now, but I got to finish those pens that I started. So, we're paying today what we have to pay. That's what the market bears.
So I mean, we were at a presentation in Medicine Hat, and I wish I could remember her name. If somebody could put it in the comments, I know somebody's on that was also there. And she was talking about the similarities from an economic standpoint or a marketing standpoint. What's happening, trends happening now compared to 2014, 2015. Could you speak a little bit, Rick, about like that market basically lasted like I want to say like a fall and spring run? What conditions are at play? Yeah,
18 months on that one. And frankly, I think the feed grain prices went up. The exchange went against us. There was a lot of the fundamentals that caused, remember, we look back onto that profitability chart we had, 14, 15 was good for everybody. Then 16, was not so good. And a lot of them dropped below the break-even line on that particular deal. It was probably Ann Wasco that you were listening to.
Yes, it was.
Ann's a great analyst. She's been around for a long time, and we're good friends. We swap notes lots of times, and so what she says would have a lot of basis behind it. But that's kind of where we're at, guys. But I think this one's extended because that one wasn't as much of a supply demand driven market as more of an economic market. And to me, what's going to drive this in the fall of 2023 and all of 24 and in early 25 is going to be the supply of the cattle. There just isn't that many around, compared to what we've had in the past. We've got a larger feeding business, that wants to keep those pens full. We've got Alberta feeders now that are content to keep the cattle on our side of the border, not to let them go south. If they have to pay a touch more to keep them on this side, they get the synergies and they'll try and make it through the efficiencies of feeding. And it also depends, Joe and everybody else, on like whether we have a feed advantage on a basis over the US. You know, there was time there last year for a while that was cheaper to feed cattle in Alberta than it was in the US. Now that paradigm has shifted to the south, and we've got guys that I do business with that are sending cattle to the US to feed for a couple of reasons. One, they can feed them cheaper down there than what we can here on the cost of gain. If they're not in a real wet spring down there, you know, they don't have the mud problems that we have out here. And they've got 4 packing plants bidding on the cattle instead of 2 packing plants bidding on the cattle. So they're doing risk management just by their placement of their inventory.
So got a question here, and I think, well, I was going to say lots of people are interested, but myself, especially, I got 80 heifers sitting in the yard at home that I'm going back and forth on about kicking a bull with them next spring. Or the question that we have here is gut feeling about bred heifers. I personally don't think we are going to see retention on heifers in Western Canada, as future prices are $2,400 plus on feeders. Just take the damn money.
Well, I think that, you know, a couple of things. One, if you're going to keep those heifers and make them into cows, and you know, in your own herd, I mean, you know your cattle better. They're worth more to you than anybody else because you know the genetics, you know the background on them. So if a guy doesn't want to pay $3,400 or $3,000 for a bred heifer, well, then I think yes, you know, you turn around and say, I'm going to breed some of those heifers to breed extras to sell. You know, we still got to get through this summer. We still got to have you know, a good hay crop. You know, we're only one season off a drought. You know, and so in southwestern Manitoba, southern Manitoba, we did pretty good the last year. You know, we weren't bad, but there was a lot of other areas that were still under the drought conditions, and so those guys, you know, they're not in the position that they're going to expand and buy bred stock or bred heifers till they get a feed supply behind them. You know, that they've got a surplus of feed. And then once they're sure they've got enough to carry over, then they'll start working on it. So, you know, to build your own numbers back up, you know, if you can't find what you want or the price is too high, that's the alternative to do it to breed extra ones to sell. You know, that system, you know, a lot of times has worked against the guys that did it. At the end of the day, you know, they'd be better off just having those heifers as opens off the grass and so on. Like when you start looking at, you know, 250 at 950 pounds for heifers off the grass, that's pretty easy to take, because the breds, you're going to have to keep them probably until November, December before there's a market for them, you know, and then you still got to get them marketed, and you know, there's a lot of, you know, extra work to it as well, type of thing. And will there be a demand? I always tell the guys, if you're going to breed extra heifers, be prepared to keep them. You know, plan B, can you afford to keep them? And if you can, you've got the place to go, well, then it's not such a bad deal. If you're forced to having to sell someone and make payments and take whatever you get, sort of like my customer in Saskatchewan did with his heifers, you know, he had to sell them. He sold his feed. He wasn't going to keep them over the winter time. God, I bet you he looks in the mirror every morning when he shaves now and says, you know, I sold those for $1,847 and I could have got close to 3,000 for them 3 months later. You know, it's not a very happy feeling. So you know, you have to have a plan. Have to have a plan B.
I wonder what that number is. Like, and I get the variables like come into play, but at a certain point, it's like if these heifers keep getting dumped on the market at $2,400, which that's a pretty easy sell. If you're getting $2,400 for an open heifer, at what point does the cow herd drop in size that this starts to correct itself?
Well, that's the thing. I mean, that's why it's going to take so long to rebuild, because as long as the feeder market stays that way, and it will be strong, because even once they start to retain, remember what we talked about, it shorts the feeder market. And where else are we going to get feeders from? I mean, the Americans are short of them. The Mexican cattle, there's more of them being finished in Mexico and less being brought up into the United States. So, you know, we have a real desire from the feeding lotting industry to keep those pens full, but we've got way less factories around. And so you know, what I would say on that deal is the day that you do, you know, a week before you decide you're going to either breed them or sell them, you look at what they're worth that day and you say, look, I can live with $2,400 and I'm happy as can be. And I sell them, I take the cash and I invest it into whether it's more cows or whatever I'm going to do with it, because I get that payment on those cows, you know, this fall. I've got a live calf, you know, on the deal, where the heifers, you know, it gives me the willies when I think you pay $3,000 for a heifer calf and she loses that calf and she's worth $1,800 overnight, or she's worth $2,000 overnight, you've lost, like you mentioned earlier on, $600-800 on one animal overnight. That's part of being a farming business, but it's a reality. It does. You don't feel so bad when it's a $2,000 one and she's worth 16 and 1,700, but and that's just the fact. So I think every operation is different. You look at where you're at, what your cash flow needs are. If you're paying 10% interest, you want to pay down that debt, so you take that 2,400 maybe, or maybe you only breed half of them. It's everybody's got to. It's everybody has a different need, and every operation is different. There's no cookie cutter solution in the cattle business. Because it works for Joe doesn't mean it works for Rick, and it might work for Rick and doesn't work for Tom.
It's really about risk appetite, right? Because if a heifer's worth $3,400 and the open heifers were 24 and the bred heifers were 34, geez, you got a pile of interest to pay and inputs to pay before you're seeing profit off that calf.
Yeah, and remember one thing, we talked about 34. That's the top of what we saw in the last 2 to 3 weeks. There were still $2,700 and $2,600 heifers out there too. We have a tendency on the market reports to, the markets report the high ones, and you go to the sale, and I saw high ones, and I saw ones that were still high in my mind, but not nearly as high as what the other ones were. And a lot was based on calving time. And like this year, for instance, you couldn't sell cows that calved in February for lumber money. But you could sell cows that were going to calve in April for way more money, because the demographics of where our marketplace is now is that, that's a popular time of calving. When I first got into the auction market business in the 80s, we had a pile of guys that were calving in January and February, and big pound calves to sell in the fall, big dollars coming out of them. But the workload just got to be too much, and it seemed it was easier by backing it up. So they adjusted. And a lot of that came from the drought in Alberta, when all those Alberta cows came into Manitoba, and these guys were buying April calving cows. And so they had their January, February's, and they had a little break, and then they had, end of March and April's, and they got thinking, geez, this March, April thing's not all that bad. Moved all their cows back, and it's just how the business has changed.
So got a question about hay and pasture acres, obviously with the price of grain affecting those amount of actually available acres to graze cattle. Do you think these numbers will ever bounce back?
Well, I alluded to that a little bit, that we may never get back to where we were, in Manitoba or even in Canada, let alone expand. And you're right, but there is a certain amount of land out there that is only good for cattle, and that's all it's good for. And so there's always going to be a need, but the evolution is changing. We're seeing a lot of cattle operations getting tore up and seeded down to, whatever canola will bring you. Who knows what it's going to bring this year? But those kind of cash crops are hard to deal with. For me as a grasslander, because we used to grass a lot of cattle, it was really hard to compete the last few years with the cow-calf guys, because the cow-calf guys would pay more than what I could sustainably pay to put steers out on the grass to go. And we had to give up a lot of grass because of that, movement by the cow-calf guys looking to, rent more grass, and they were prepared to pay more than what we could pay. And now we're seeing it with the grain guys moving in. So yeah, there'll be less acres around, and there's a lot. So you look at Norman Anderson's operation over at Merrifield, most of that was grain land that he bought years ago and seeded down. He could turn that back into grain land tomorrow. He could sell it, and it would be broke up for grain land tomorrow, and that would be another 40-some quarters of land that just disappears off cattle production. So that's another restraint or restricting thing that's going to happen in the cattle business. And before, when you were thinking of selling your cows, well, what was that going to do with my land? Now there's a lineup of guys outside your door that are willing to buy your land, and they don't want the cows. And we're seeing that. And when a lot of those Europeans went home, that's exactly what happened. They were able to sell that land back to the grain guys, and decent money, and just walk away from it. And that was one less cow herd that we had in Manitoba. So that trend will continue.
Sorry, summarize that again for me. That trend will continue, you said?
Yep, it will. Like there's no doubt about it. As long as the grain prices stay high, and the big want to get bigger. You've got the equipment, if you got everything you need to, maximize your acres. So I mean, they don't make land anymore, so they're going to buy it wherever they can buy it, and if it's close, it's we're seeing that all the time. I know of an operation that just came up for sale this week in our area. and I think there's 17 quarters of grain land and a cattle operation there, and the cattle operation's an anchor on it right now, because they could sell the grain land. There's guys lined up ready to buy it, and none of it will be used to grow silage if the other guys get it.
I have a prediction, without going off on a tangent, Rick, that interest rates are going to affect the grain farm worse than the cattle farm currently. We've had
right.
We've had enough hard times in the cattle industry that I think a lot of people my age or in my age demographic are sick and tired of carrying debt load on a commodity that isn't making them a ton of money anyway. And as far as increased interest rates go, I so hope I'm right, because it would be devastating to the cattle industry if I was wrong. But I think one thing that the lack of profitability in the cattle industry has taught the producers involved is to understand and be reasonable as far as costs and carrying debt and interest.
Well, it's part of the management program, and if you remember, we talked about the importance of management, and that's extremely, moving forward. I mean, I know you call fortunate enough, but I lived through high interest rates, and higher than we've seen today, double what we saw today, and the guys, we seem to survive it. Whether we can survive it now because of the cost of everything, well, we bought our first house in 1980, and it was 11.5% is what the interest rate was at that time, and it had come down a lot. We thought maybe that was going to be a bargain, but it kept coming down. But a lot of guys, you can't use a farmer pencil. You have to use the real math, and that's that's part of the management side of it. Is you got to manage that debt load. That's why I get nervous at $3,000 cows. It just.
So got a question about the increased placement of dairy cattle in feedlots throughout the United States, Alberta, I guess just Canada in general. What do you anticipate as far as how that's going to affect prices in the future? And is it something that we should be paying attention to?
Well, I think you pay attention to it. It's going to fill part of that gap, because we're short of cattle, but we sell beef. We don't sell cattle. At the end of the day, we're producing beef. So here's a set or an animal that for a long time was worth next to nothing, and especially the male calves. They were disposing of most of them, and then there got to be a little bit of a feeding industry for it. And then when there was lots of beef cattle around, they were discounting the Holsteins pretty bad, and the conversion rates weren't that good. Grain went up. But this beef on dairy is something that is going to, be a player in the game. The dairy industry is getting bigger in the U.S., and these, they're producing. So if they produce 900-pound carcasses, every one of those, what used to be a Holstein bull calf that never made it, to the first summer, is now into the meat chain, and it's an acceptable product. It's a pretty good product. They're fed properly. So it's filling that gap. So at the end of the day, we may be short of cattle. We may not be as short as much meat as we are cattle. So it's just something that's going to temper the thing a little bit. Will it affect the prices? Not significantly, because again, at 15%, there's still an awful lot more. It may replace the heifers that are on feed now, that'll be going into the breeding programs down the road. But that's something that's really taken off. I was in California just before BSE hit, or not BSE, COVID-19 hit. And, a lot of big dairies down there, and they were shipping their calves to the Midwest to get fed. And, before they were quietly liquidating them. And, so that's just that many more cattle that are on the market that weren't on the market before.
So thank you for putting in the comments. It was Brenna Grant from CanFax, if that's what I was talking about, if you know her, Rick, but she gave an excellent presentation. So we got a couple more questions, then I want to get to your kind of final thoughts, Rick. What do you think if there is continuous drought, or say expanded drought, something like 2021? Do you think that will further reduce cattle inventory because costs are so high, or will record prices buffer that? So
it will. I think, Joe, and it's my opinion, if that happens, we will see the expansion won't happen, but grain prices will be up so high that it'll put a cap on the feeder cattle prices. It has to. I mean, if we start seeing $12 and $14 corn, the cost of gains, are going to be, we had a 30% increase in the cost of gain for this fall. So, I background some cattle around this particular area of Manitoba for my Ontario and Quebec customers. And so we went out to negotiate the cost of gain this year. And I got the people I deal with are really fair and they're good operators. And they said, well, we need this much. And that's 30 cents a pound more than it was last year. And I kind of, took a sip of coffee and they said, because I can sell the corn to Manitoba at that time at 9 something delivered. So I got to be able to get that out of the feeding the cattle. If I can't, I might as well just sell the corn and leave the corrals empty. And you want me to grow silage to mix with that corn, and I got to get so many dollars an acre off of it. So for me to be sustainable and stay in business this year, next year, I have to charge this much money. Went back, told my guys this was going to be. It was higher than they wanted it to be, but it was still cheaper than it was feeding them at home down there, and they've got access to the cattle when they need them. So they all said yes. So if the grain goes up, the cost of gain goes up, that's going to put a cap, no matter how short we are. There's only so much they will pay for the feeder cattle, and that, so a drought would be detrimental for us at this spot. We're going to take advantage of the drought in the past, but we need to get some feedstuffs in front of us here moving forward to maintain these prices and to see a slow growth coming back into the numbers. That's my opinion.
Hopefully I'm not throwing a grenade at you here, Rick. Rick, are you seeing a correction in cattle frame size? Is that one reason all these heifers are going for feed and not breeding stock? Is because they are decreasing frame size?
Somewhat. But in Manitoba, we've got a lot of crossbreeding in our genetics, and I like that. It's easy to sell. I've got customers that want to buy cattle out of Manitoba. They don't want to buy them out of Swift Current because they don't want calves off of 1,200-pound cows that are born in May because they can't make them big enough. They like these Manitoba cattle because we've got the genetics. So, I like the crossbreeding. I mean, we've adapted our business. The Semitol guys have done a really good job of going from 1,800 to 2,000-pound cows, to a real saleable product now. And these black and red calves are good. Our Angus calves here, we've got good quality here. We've got lots of different, genetic mixes, so they're a little harder to predict on the feeding side. And I find that, from my days of pre-sorting when I ran the market in Brandon and at Pipestone, is we put together 100 calves that had a 50-pound weight break in them, and I really liked the look at them. And then we'd see them when they were 900 pounds, and we had 3 distinct types of calves. The genetics had really kicked in on the deal. So on the heifers, we're seeing some of the guys that are going to, a smaller frame, but a lot of the cattle are still got some exotic in them. And I didn't even go to agribition this year because I just get frustrated when I walk through the barns and see all these little cattle look like toasters with legs, because it's not what the market is dictating. We sell beef, and if we can sell a carcass that weighs 950 to 1,000 pounds at no discount, and the cost to gain, and the conversion is efficient, we shouldn't be shorting ourselves, into having a 680-pound carcass. It just doesn't make any sense. They keep telling us that somebody keeps telling us they want smaller carcasses, but the packers haven't indicated that to us because they haven't started discounting us on the big cattle. And when they reach out, they'll cut a pretty fat pig sometimes on a deal to get the cattle, because now we want marbling, we want grading, and that comes with genetics. It comes with days on feed and quality of feed. Those are the 3 main things that get to there. And there's a huge demand for AAA, and we're getting more and more AAA. And part of that was because of the delay in getting these cattle killed. Some of them were 2 months longer. And when feed gets high, everybody uses the math book really quick. And the conversion on the feed in that last 2 months is terrible, absolutely brutal for the consumption. And so everybody was complaining about, we need to either get compensated for better grades or whatever we can. But if we look at, you'll go onto the grading charts and see, the increase in AAAs, that's where a lot of it came from. But that's selling our meat, because that's what the public demands, what they'll pay a premium for. So on the heifer side of it, it's whatever fits into your operation, but we sell pounds. You always sell pounds at the auction mart. The more pounds that you can put on without having too much fat on them, the more dollars in your pocket.
I got kind of a double-edged question, Rick, and it'll be the last one before final thoughts. So I did not hear about this. Will the labeling announcement in the USA today affect our prices? And I got a follow-up question. I just heard this in a hockey rink, drinking beer in a dressing room this weekend at the Old Timers tournament in Clearwater, that Brazil has animals have tested positive for BSE. I guess one, is that true? And two, how do you see that affecting the market? So you got Brazil BSE and new labeling announcement in the US.
So let's talk about Brazil right off the top. They've had their problems with, hoof and mouth BSE before. There's different variances of it. Some of it's more. They are a big exporter into the Asian market, into some of the European market. If they're not able to export out because of some communicable disease such as hoof and mouth or BSE, that opens the door for us to put more product into there. Australia's coming back on. They were droughted out for quite a while. That's their big bread and butter market too, is into there, but they've had a huge retention of heifers and trying to rebuild the herds after the drought down there. So they haven't been producing as much. That opens the door for us. The labeling part of it, I am not just 100% sure of the wording on that. I was at the sale all day today, so I'm not up to date. So I really can't comment on that. But I know that the Canadian Cattle Association will be on it like dirt on a dog, because when they started to the Canadian government wanted to label our beef with derogatory information on it, they got that shut down pretty quick. And as a producer, guys often wonder where my checkoff goes. I've spent the last 4 or 5 years sitting at the table on behalf of the marketing sector at CCA, and those guys do a lot of work that we don't know anything about until you're sitting at the table, and they'll have our best interests in mind. So the Americans are still protectionists, but we're at that spot now where they're looking for beef, they're looking for cattle, they're looking for everything, and I don't think that they're going to allow too much non-trade tariff barriers to get in the road of business. And again, that north-south thing, believe it or not, we were a net importer of calves last year. We had more import calves from the US come to Canada than we ship south.
Wow.
And that's so our calf, put that in your pipe and smoke it for a little while, because it's at the end of the day, we're not it's not a one-sided deal anymore. We're as we've expanded and the geographic part of moving those cattle up here, we become a big buyer of their cattle. And so that sword can swing both ways, and I think cooler heads will prevail.
So I guess this is the time I better give away the jacket and the hat. Rob Wonder, you asked about 7 questions. We'll send you the jacket, so put your address in. And how about we'll go Joel, I'm going to screw this up, Kienle, Kienle. If you want to put your address in, that would be great. So Rick, this is what we've kind of done this the last few webinars is like final thoughts, and I have a specific one for you. There are lots of people that like cattle producers that are probably 55 to 70 that are going to get out in this market boom. But I wondered if you would take 5 minutes to talk to, say, a producer that's my age that has some of their footing under them. They don't want to get out of the cattle industry. They want to stay in. They just don't want to screw up this market opportunity that's in front of them. So I was wondering if you would be able to, because it's easy for the farms that are going to get out. They're just going to get out, and it's not a bad time, and I don't hold it against them. But for people that want to have a future in the cattle industry, how can we best take, and I mean cow-calf, most of the people on, but like, what is the most effective way, in your opinion, to take advantage of the current state of the marketplace?
Well, I think it goes back to your operation management as much as anything. You have to look at your risk management. You have to look at your financing. You need to produce the pounds. So that means, looking after those cows, having them calve at the right time. You can't have, May calving cows and sell those calves in the fall. You can't generate enough dollars off of them to make any money. So you have to get yourself in the position where if your payments are in the fall, that you've got financing to carry those cattle over to the springtime. And if you can't feed them at home, look at the opportunities of having them custom fed someplace to put value add onto those particular animals. Animal husbandry, the proper castration techniques, dehorning, making sure that your rations are balanced. I mean, we have a couple of customers that are relatively new in the backgrounding industry, and we work really close with them on their feed rations to get better conversion, more pounds, without getting the cattle fleshy and unsaleable. Your cattle presentation, when your cattle come, if they're all covered with shit or they're all covered with mud in the spring, and they don't look their best. Selling cattle is like selling used cars. It's that first look gets your attention as a buyer on the deal. And work with your marketing agent, whether it's a broker like myself or your local auction mart, and build a relationship with those guys. Find one that'll take time to talk to you and will work with you on marketing your calves and earning that commission that they charge you, because it's a market that's very changeable every day, and guys like yourself probably don't have time to sit on the markets every day. That's what we do for a living. And if we're charging you or you're paying us a commission or a fee to do it for you, we're working on your behalf. And I think that's a lot of it is watching the market. Watch that price insurance program, watch it going up and down, look to the future and see what you could insure your calves for. I'm not saying that's what you do, but it gives you an idea of what to expect. As of today, I could insure those calves for $3.20, and it's going to cost me 8 cents a pound to do it. So that brings me down to $3.10 basically in my pocket. And I'm going to have, and remember, the insurance, you're selling pounds, not heads. So I'm going to produce this many pounds of calves to sell in the fall. And I can live with that if that's what it is. And maybe you're going to get more than that. Maybe you'll get a payout of it, maybe you won't. But at the end of the day, as a young guy, you have to risk manage. You have to know what your costs are, and you have to be prepared to put in the work. And a lot of the guys I see, are trying to do two jobs. They're working off farm and on farm to try and keep the cash flow in. And maybe their cow habit is what's eating up the profits off the other side. But it's one of those things where you need to know how many I need to break even. You need to, if you've got pasture for 40 cows on a dry year, you want to have at least 40 cows, not 25, because you need to get maximum return off those acres, and your feed is, so maybe maybe the hay is too high, but there's other feed, opportunities out there that you can capitalize on. And don't be afraid to get the feed analyzed so that that your cows are getting the proper diet so they can produce the pounds, because we're selling pounds. That's what we're selling at the end of the day. And I think you have to, the best advice I can give for most young guys is at the end of the day, you let the science and the math, make your decisions for you rather than emotions, because it's hard to keep that out of it. But at the end of the day, it's a business is what it is. And if you're in it to try and make some money and to have a good lifestyle, it's, all of us have got here through the cattle business. It's always in our operation at home, it was the cows. Dad had a real successful auction business for a lot of years, but it was the cows that kept things going all the time, and it wasn't without work. And it's changed a little bit now, because before you could get away, 100 cow guy was a big guy. And to 100 cows now, if you're making $250 after tax per head clear, that's $25,000 a year. That's not enough to live on. So you have to be realistic in your expectations, because if I told you we're going to clear $250 a calf after tax and expenses, you think that that's pretty darn good return, because it's but when you look at the economy of scale, it's not. And the economy of scale is, like I say, you've got to get maximum return. So and I think as an industry, one of the things that we've talked about, is trying to get MASC and these guys to be more current with their, limits on what you can borrow for cattle operations and this thing, and work with these guys. Like, when we can't buy calves under 400 pounds. Well, there's days in the fall, if a guy's got a nice barn and I can buy some of those 350 pound calves that work really, really well. They just take a lot of work, but there's a lot of profitability in them, because sometimes we can buy them at a huge discount, but they don't qualify for MASC financing. there's little things like that we as an industry have to work together to try and get changed if we're going to encourage these young guys to go into it. And I'm guilty because my son's not in the cattle business, and when I was going through it, I said, there's got to be an easier job than this, and he's in the oil patch and he makes more money than I do. So it's hard to, direct the guys unless you want to do it. We talked about desire earlier on, desire to be in the business. You really have to have it. And if there's any doubt, then I think, the best advice is to look at something else. But with that said, I still think we got 5 years ahead of us here of with average crops and good weather. And we got 5 years where I think the cow calf industry is going to have the leverage. And don't kid yourself. The margins aren't going to be as good as you think they are, because we've got to keep track of those increased input costs. But I think for the next 5 years, you are going to be compensated more fairly for your product than you have been, in the last 5 years. That's for sure. After that, it's a crapshoot, and I'm going to be sitting on a porch in a rocking chair. So,
in Manitoba winters, or no?
Probably Palm Springs, I'm thinking, but it depends on the exchange.
Well, my wife and I we went to on our honeymoon in November to Thailand, and yeah, I could get used to that, Rick. I don't necessarily have an affinity for winter. But anyway, Rick, I appreciate your time. I mean, there was excellent feedback and really good numbers on tonight, so can't tell you how much we appreciate it. And it's nice getting your expertise, and hopefully there was some good value brought tonight, and you have a really great perspective, and hopefully there were some farms had some takeaways, because I mean, it's like I said, we there's not a ton of opportunities in the cattle industry to not cash in, but make good sound financial decisions, and we appreciate your feedback.
Well, thank you very much. It's my pleasure, to be here tonight. And again, I have to commend Covers and Company for taking the opportunity to look at the cattle market, because we get left in the weeds sometimes. So when Owen phoned, I said, yeah, you guys showing some interest in the cattle business, and it's been good to me for the last 40 some years, so I don't mind putting a little bit back in. So, and folks, if we didn't get to your question, you know how to find me. Give me a call, and I'll tell you what I think. It might be right, it might be wrong, but it's what I think. So thank you very much, folks.
Awesome. Thanks a lot, Rick. Have a great night.
Good night.
We'll see you.